Hello everyone, Sabelo speaking here. So in this video, I just want to break the AUD CAD down for you, which was a very nice trade for a sell. I caught the sell over there. In fact, I missed the high of the week here because the setup was not perfect for me, but I was able to get to caught the re-entry here and another entry here. So, and also this trade was also given to my students for free. This is the trade here. A CAD for a sale. I marked my things, nicely so that my students will be able to see what is it that I'm expecting in this trade here. So this trade was given to this group in this group so that when I give out the setups for the week. Whenever I see a beautiful setup, I share the setup here in this group for free to my students, to my old students, by the way. So this is where I share my analysis, my everything in this group here. And I also do Zoom sessions whenever I feel free. I do Zoom sessions and then I post my, the videos here. As you can see, there's a video here when I was breaking the market down. There's a video here when I was having a live session. Whenever I see an opportunity, then I share my knowledge here. Okay, so let's go back into this trade here. So this trade was, as I was saying, I caught this trade for free. And then let me just break everything down for you just to show you how I got this trade. What was the reason behind it? Okay. First thing first, we are going to remove everything in this chart here. And then number two, we need to come to the daily time frame. So after coming to the daily time frame, we are going to use this moving average to identify a trend. This is, the free indicator that everyone has an access to. You can get it here. So this is a moving average. We're just identifying a trend. As you can see that the market was moving smoothly to the downside. So if the market is moving to the downside smoothly like this, we know for sure that we are going to be looking for sales entries whenever we come down to the H1 time frame or the 15-minute time frame. We are looking for sell entries only. Okay, and then after knowing the direction, we need to mark the key zones. Okay, let's just extend this, extend, and then we are going to mark this, going to mark this, we're going to mark this again, and we're going to mark this. So why are we marking it? Because that's when the market was making, nice reversal zones. Okay, as we all know that the market is moving in waves like this. Okay, so what we do, we mark those reversal zones. We mark this, 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 and so on and so forth. Okay, all right. So after marking those support and resistance zone, you need to come to the H1. Okay, and remember, you know the direction now. The direction is saying we are going down, right? Number two, you need to mark your support and resistance zone. Number three, you need to come to the H1. So what is it that we need on the H1? We need to see the market making a pullback of the higher time frame. Okay, let's go back again. We need to see, as we all know, as we all see that the market is moving to the downside. If it's down like this, we need to see a pullback. but we only look at this pullback here on the H1, not on the daily, not on daily. Okay, now let's go back to the daily time frame. So let's see our turning point. So our turning point was in this area here. This area here. That was our turning point. That's when the market started to go up. That was the higher time frame pullback. So this is the turning point. Okay, let's make it so small. Okay, so now we know the turning point that is here. Now we needed to see 3 pushes to the upside, which is going to give us a nice high of the week. You remember, there is a high of the week and there's a high of the day. Okay, so on the H1, that's when we want to see the high of the week before we identify the high of the day. Okay, so in order for us to identify the high of the week, we need to see the market moving up consecutively, making 3 pushes to the upside. Remember, we need to see 3 pushes pushing to the upside like this. Okay, so let's remove this. Yeah, now we're going to use this tool. This was our first push from the turning point here. We saw a pullback. Then second push, pullback. And then the last push. Okay, so this was a confirmed high of the week. Okay, we are going to mark using this line here, or even here we can just use this ray line. Okay, that was the lowest point of the week, that was the highest point of the week. After that, we need to see, okay, we need to see a big M on the H1, not just an M on the 15-minute time frame, because we are on the H1 right now. So I was expecting to see the big M here, something like this, before we sell. Okay, before we sell. But the market didn't give us that second leg of the M. Okay, I knew, I knew that, okay, the market is not giving us the second leg of the M. What was the next thing to look for? Let's look our picture here. After missing that M, I knew that the market now is going to give us the high of the day. Remember, that was the high of the week. Now the market is supposed to give us the high of the day. Okay. So after knowing that the market now is moving down, okay, that's when we must put in your trend line. The trend must put in your trend line. Why are we putting the trend line? It's because we want to see if the market has broken clearly or not. Okay, we want to see the market has broken or not. So this trend line was so clear that the market was pushing to the upside, and then I was waiting for a break, and then a consolidation during the action session, and then I was expecting to see the market making the highest point of the day somewhere around in this zone here, and then selling. Okay, so now after knowing that, you need to come to the M15, because that's when you must spot the highs and lows of the day. So let me just explain what is the high of the day or what is the low of the day. Okay, a perfect high of the day or the perfect low of the day is supposed to be like this. This is a consolidation phase in the action session. It can be like this. But if you are looking at the overall structure, you must have no direction. So here the market is bouncing in the same price. Okay. In fact, it's making something like a range like this. Okay. But this must happen here, not in the middle of the day. Okay. So after seeing a consolidation, you must see it either a break to the upside or a break to the downside. That's supposed to come in the London session. Okay. But in our case, we saw a break to the upside. Okay. The London session made a clear break to the upside, meaning that if the London session is breaking to the upside like this, we are going to be expecting a reversal pattern like this. And then if we see the second leg of that M pattern, which is a reversal pattern, if we get a second leg, which is this, that's another confirmation for us to sell the market. Okay, you sell the market, enter here, put a stop loss above, and then you hold your trade. Okay, so let us remove everything here, and then let's come to here. Okay, or let's rather remove this. So in this box here, okay, we saw a consolidation phase in the Asian session from this zone here, or from this line here, that was the opening of the new day, and then we saw a consolidation, and then London session, I'm expecting an up push. Okay, an upward movement. Why? Because I want to see the market coming to me so that I'll be able to sell. Okay, so after that, I was expecting to see a perfect M that is making a bearish engulfing. As you can see, the market made a bearish engulfing here. Let me just clean everything for you guys. This was a perfect engulfing here. This one here, because it engulfed all of these candlesticks here. Okay, so your perfect M is supposed to be like this, followed by an engulfing candlestick, and then you must enter here for a sell. You must enter here for a sell. So that's when I decided to enter, put a stop loss above both of these wicks here, and then my stop loss is supposed to be above that zone, these two touches. Okay, let me just mark them for you. Supposed to be above these highs here, because the market can make a triple top. There's a possibility of a triple top. So if your stop loss is like this, the market can come, make the triple top like this, and then hit you out, and then go down. So we don't want to be taken out. So the best way is to put a stop loss above those two touches. So let's go back now to and remember, we are still looking for a sell. Our direction on the high time frame is saying we are selling. As you can remember that on the daily, we are looking for a sell. And then on the H1, that's when we identify the high of the week, so that you will be able to sell when the market has given us a discount. Okay, so our S entry was supposed to be in these zones here, but we didn't get a nice big clear M setup. That's why I waited for the high of the day, so that I'll be able to trade and also be able to capitalize from the market by catching the re-entry. Okay, and then on the following day, you must also look at the break. So now you must use your price action skills. Look at the previous touches. Okay, let me just mark them out for you. Look at this. Look at this. Look at this. Okay, and then you must mark those clear touches. You must mark those clear touches. So which means this is now your support zone. This is your support zone. So whenever the market breaks, okay, let me just draw it for you, maybe aside. Okay, let's say, okay, the market is like this, going up, and then maybe making something like this, and then it breaks these two touches. It breaks like this. That's when you must come and mark those two touches. Okay, you must mark this. You must mark this touch here and this touch here, so that whenever the market comes into this zone and make the highest point of the day, and then you can sell. And remember, if you want to sell here, don't just sell based on maybe the M or what. Look if the market has made the push in the London session, and then New York session must create an M. So this M supposed to be in the New York session, okay? So that you'll be able to sell. Because if you just sell in the London session or the Asian session, you can be caught in the wrong side of the market. For example, let's say this is the Asian session is going up, 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 and then you see something like this, and then you enter here. The market can still go up in the London session, and then make another small pattern in the New York, and then sell, and then you'll see that okay, that was the triple top on the H1. So we must not trade based on the movement of the Asian session. Wait for the London to come to you and then sell in the New York session, especially if you are trading the Canadian dollar pairs, US dollar pairs, and maybe Euro and Swiss. Okay. Okay, let's remove this. Okay, let's go back into our analysis. So I saw a break here. The market went down aggressively and then came to this zone in the following day. And then I went down to the 15-minute time frame again, because that's when you're gonna master the entry points on the New York session. So I saw a break, boom, and then London session, the market went up. As you can see, even the time here, it says it's 11 a.m. South African time. So this push was just coming in the London session. That was the first leg of the M, and then I was expecting the second leg. The second leg was made a spike, but I waited for the spike because I was still waiting for the New York session to complete the M, so that I'll be able to sell after the New York session has completed the M. And then after this, that's when you can decide to sell. Enter here, put a stop loss above those two touches. Okay, the first touch, then the second touch. So your stop loss supposed to be above that. And then targeting the same low. Why are we targeting the same low? Is because we have a confidence that the market is going to come here. Why are we having a confidence? Now we need to implement the new thing, which is also called the correlation. Now remember, in forex the forex is divided into three, according to me. Okay, according to me, forex is divided into three. There is technical analysis, there is sentimental analysis, and there is fundamental analysis. So me, I'm currently using the two. I'm using the technical and the sentimental. Okay, I'm using the two. So this is where I look at the sentiment of the market. How many buyers, how many sellers in a particular currency. Okay, so let's start by looking at the AUD. Let's start by looking at the AUD, and then on the AUD, I saw that the market is bearish across the board. AUD versus Euro is selling. AUD versus GBP is selling. AUD CAD selling. AUD USD selling. AUD JPY, AUD NZD, AUD Swiss is selling. Meaning that all AUD pairs are bearish. Okay, so whenever we see a setup here, we must only look for a setup for a sell because AUD across the board is selling. So now we need to see what's happening on the CAD because this AUD is not alone. It's AUD versus Canadian dollar. Now we need to come into our sentimental platform here, and then we need to check what's happening on the CAD. So the CAD, in my notes here, I can clearly see that it was neutral because it's up and down. It's up and down. CAD versus Euro is up. CAD versus GBP is down. CAD versus Swiss now is neutral. CAD versus USD is down. CAD AUD is up. CAD JPY is down. So it's up and down overall. So I was so confident that AUD is going to proceed with the downtrend because Canadian dollar is neutral. Okay, Canadian dollar is neutral. So whenever AUD wants to go down, the CAD is going to allow that because CAD doesn't have any power. It doesn't have power to go up. It doesn't have power, weakness to go down. It's just neutral. So if we see a neutral currency with a weak currency, you must expect a weak currency to continue pushing to the downside. Vice versa, if let's assume AUD was strong and then Canadian dollar was neutral, we could have seen a clear up push, okay, uptrend, bullish momentum. So yeah, so I think I'm done explaining everything that you need to know about trading the highs and lows of the week, highs and lows of the day, and I also explain a little bit of correlation, and a little bit of market structure, identifying the trend, marking those touches, support and resistance zone. So yeah, so this trade was also given, as I was saying, all of the trade that I see in the market, I give them into my clients because I also want them to see what is it that I'm looking at. This was the last trade of the week. We caught the first one, which was the lowest point of the week, which was deep in profit, and then my stop loss was in break even, and then this trade here, it didn't work because here I didn't get a setup. This was supposed to be the lowest point of the day for me to buy, but I ended up being stopped out at break even on the first entry, and then here I didn't get a setup for a buy. So make sure that you consider looking at the 15-minute time frame for entries if you are taking a re-entry, not the first entry, because the first entry is aggressive. It's just an aggressive entry. Stick to the H1. Look for your big W if you are buying. Look for your big M if you are selling. But if you are looking at the re-entries, look at the 15-minute time frame and focus on the New York session. That's when you're gonna get good results. Okay, guys. I think I'm done explaining about this pair that I was trading. So if you need more videos, subscribe into my YouTube channel. Maybe You can even like the video if you do like the video, but if you don't, just can smash the dislike button. It doesn't affect me. And if you want to see more examples of my trade, you can come into my free Telegram channel. The link is going to be below this video. That's when I give out free signals in this group here. This is a group where I give out free signals, free videos explanation of which trade I'm looking for. That's when I share everything about my course. So for my students, this is a course that I've created recently. This is the latest one. So here you're gonna find the new strategy, which is the one that I was using here, which is a combination of the old one and the 2.0 one. So here I'm combining two strategies. There's an old one, which was the 1.0, which is this one here. And then there is also, there's a 2.0. Where's the 2.0? I think it's supposed to be here. It's supposed to be here. Yeah. So the 3.0 is just a combination of those two. So for people who still need to come and join, the course is still available for only $49 for this month. They can come and join. But for those who are in my course already, they will join this. They will have an access to this course here for free. So yeah, I think I'm done, guys. Have a nice week. Thank you.